is a pip? Simply put, a pip is a change in the quote of a currency pair, which can affect the profit or loss from trading. To start successful trading, you need to understand how to calculate it. For most currency pairs, the price quote is indicated by the fifth decimal digit. Consider EUR-USD pair with the price of 1.14001. 1 is a pip. Increasing the quote to 1.14002 or decreasing to 1.14000 means a change by 1 pip. If the price quote is indicated by 3 decimal digits, for example, in the case of the yen, then the pip will be considered as a change of the 3rd decimal digit. Consider USD-JPY pair with the price of 107.308. 8 is pip. How to calculate a pip value when trading 1 EUR-USD lot. For calculation, we will use the formula 0.00001 times the contract size times the lots, where the contract size is the trading volume, 100,000 euros, and lots is the number of lots. Let's calculate a pip for the USD-JPY pair. Assume that 1 USD equals 107.308 JPY, where K is the conversion rate. Let's calculate a long-term pip for the EUR-USD pair. Assume we bought 1 lot of EUR-USD on January 21, 2018 at 1.14220 and sold it on August 13, 2018 at 1.24450. The profit is 10.230 USD. This is what pip is in a nutshell.